Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Welcome. And we want to start things a little bit differently today. We're going to be looking at our Smart Scan tool, which is right here. And I want to share with you what I saw this morning. And that is the similarity between these two scans, plus 100 and the minus 100. What's separating these two right now is approximately about 58 stocks. So it's less than 10%. And I think that's the similarity we're seeing in this trading range type environment that we're currently in. And I think that's likely to continue until things get sorted out one way or the other. But that's another interesting way to look at the trade triangles and how they work. So again, this is a trading range type environment where you're going to balance between the up markets and the down markets. So let's get started and start looking at our portfolio. Looking at our portfolio, you can see that we have a mixed bunch here. You can see that our indices right here are mixed. The longer term trend is down. Somewhat difficult to figure out when you see that the market is jumping up and going up like it did yesterday, but longer term the trend is still down and it's a counter trend move going into resistance. So let's just go to each of these things. The big news, I think, of course, was gold, which took a real hit yesterday. And okay, here's a gold market, and you can see yesterday's move was pretty dramatic. We had a big move up over the 1180 area, only to come down dramatically later in the day and still close just down a little bit for the day. But generally speaking, the market's not that different from where we closed last Friday. We closed at 1164. We're currently trading at 1152. So if we get closed tomorrow, perhaps towards these levels, I think it's just another flat week. Sort of disappointed that we didn't see a follow through, but nonetheless, the major trend and the minor trend, the intermediate trend, is still positive. Only the short-term daily trend, which means you should be out of the market right now, is on the downside. Looking at the euro dollar, this market's still very, very negative. We're talking about this going down to the 108 level. We still think that's going to be where we see the trend. You can see that we've had a big sort of top building here, or just rounding out. This was the key level right here, support. We cut through that support. Once we did that, obviously the market was in a free fall, and we've gone from 111 down to 109. So I think we still have some more room to go. We are oversold, but that doesn't mean we can't go lower. So play that from the short side. Here's crude oil. Crude oil's actually moved up. We saw that move yesterday. We're still below the 50 line. Longer term, the trend still remains negative, and I think we probably just ran into some resistance today on this recovery ride. I expect the market to go a little bit sideways. Driver yesterday was what was going on in the ECB and the Fed, so that's the other thing that pushed these markets dramatically around. Here's the Dow. Let's scope this out for a bigger picture. Let's go for a 1 year, year to date, and you can see where we are in terms of just the resistance in these markets right here. That's a lot of work for this market to get through. You're talking months and months and months of resistance. I don't think it's just going to suddenly slice through. Our major trend is still negative. We are overbought, and I think this market could actually see a pullback from where we are right now. We closed last week right here. On the 23rd, we closed at 17,646. We're not much higher for the week, which is hard to believe, and we certainly haven't finished today's trading or Friday's trading. I would not be surprised to see this market close lower for the week. Pretty much the same picture with the S&P 500. Again, you have this amazing amount of resistance over the market. Not to say I can't go over it, but it's very unusual the type of pattern we're seeing for this just to go up and go right through. We thought with this pivot point, we talked about this pivot point before in the S&P like this, that we could see a move higher, and that's exactly what we're seeing. But we're running into resistance now, and I think you have to look at this market and where it closed last week. And we closed last week, we closed at 2,075, and we're 2,084 right now, so just a little bit higher for the week. So I would not be surprised to see this market pull back from where we are right now. This is the NASDAQ, and a little bit different pattern here, but nonetheless, it's still the major trend is still down. We're running into resistance. Again, we've got this resistance level kind of right around these levels where we are right now, so we're into this resistance. We'll have to see how this market closes for the week, and I think it's still too early to tell. A little bit of a different picture because the tech stocks are still pretty strong. So, hey, be careful, be cautious, be disciplined, and be focused, and have a game plan on what you're doing now, because these can be really rough markets here, so be careful. Adam Hewison from Market Club. Thanks for taking the time to watch this video, and every success. Ask about any market and get an answer. Only for members and only from MarketClub.com.